Good morning, traders. This is Tony D from easyMarkets TraderTalk today for the 8th of August 2017. One of the quietest days in memory actually yesterday. Very little movement, 20-point ranges. Now this is as the market absorbed that strong US data, a little bit of a fight between the US dollar sellers and the buyers after the pushback on the NFP on Friday. In terms of what's happening so far today though, in the Asian session, you are seeing a little bit more US dollar weakness. There was some dovish talk from some of the central bank members from the Fed overnight, and after a little bit of a toss-up which way the market was going to go, it's gone back to selling US dollars. So it looks like the chance of the US dollar having a bigger recovery is a little bit more weaker today. If you're looking at the top side levels where we want to get to, if you look at the dollar index generally to see how the US dollar is doing, you can see here that we rolled over a little bit, but you've got a fair bit of distance between 93.16 and those lows from last week, which was around about 92.50. Now remember, if you are trading off the dollar index, there is that really key level 91.80 if we do get some selling coming through, and if that level was to break, then if you look back in time, then it's another 10% that the US dollar can sell off if it wants to break through some of those key support levels. Alright, so it is a pretty pivotal time in terms of the outlook for the US dollar. There was some talk that those numbers were strong enough that we would get the Fed talking about rates again as soon as September, and definitely for December. But really we have to focus on inflation numbers now. So the inflation numbers are coming out on Friday this week, and those numbers are gaining in importance. Before that, we do have a little bit of a side event, which is the RBNZ. So the RBNZ have notorious aggressive in their jawboning attempts, and you can see that the Kiwi dollar is at week lows in anticipation of this again this week, and you're seeing that the Kiwi's actually lower on most of the crosses. So the trade that we're in from last week is that long Aussie Kiwi trade. It's starting to come good now. Top side levels, we have some resistance coming through at 108.50, and then 110 is the big target that we can get to from I believe 2 months ago we got to 110, and at that time the market was also very bullish on the Aussie Kiwi, but the Kiwi had a very strong recovery after it sort of ignored the central bank. So you got to be wary about that as well. Even though everyone's talking about the central bank being dovish on Thursday morning, you are also be aware that the central bank's been dovish for the last 2 years. So and the market may react to it, but not for the long term. Especially if the US dollar is weak, that would give the buyers another reason to start buying again sooner rather than later. Alright guys, I'll give an update again tomorrow at the same channel. Come through. If you do want to talk to a dealer like myself, and you want to get a little bit of guidance in how to trade or what's moving, you don't have the time to do the analysis yourself, then come through, become a dealing room member at easyMarkets. You can find the link information below in the YouTube channel. Thank you.